Well, markets are starting off a little bit in the red to mixed. Dow up tiny bit, the NASDAQ down. You know what? I don't expect to see a lot of action in one direction or the other today, but as soon as I say that, something will happen and the market will go crazy. But we've got so much activity happening on Tuesday, Wednesday, and Thursday that I'm thinking folks are going to be waiting to see what happens. They're going to be a little nervous about the CPI, PPI, et cetera. Most economists, as I noted last night in some detail, seem to think that the CPI, PPI readings are going to go sideways. They're going to be about the same as last month, not enough change to really move the needle. And if it doesn't move the needle now, you've heard me say over and over again, I don't think there's a chance that there's going to be any reductions in interest rates before the elections. So think about this is June. We'll get a if this is even, if we see just a level kind of sideways move on CPI and PPI, then we'll have the PCE later in the month. We'll have another PCE at the end of July, along with CPI and PPI. And so that's going to be, we have a Fed meeting in July, but then we don't have another one until September. I don't think there's a chance in the world that if we don't move by July, that the Fed is going to move in September, unless, and the big unless is, unless there is a dramatic problem. In other words, the numbers are really big, like a 4.2 or 4.3% unemployment number. Our inflation just drops off the face of the earth, drops down to 1% or something. And you can see it. I mean, it's significant. You can feel it in all of the stats. You know how that works. I think you know how that works. But if it's happening, I'll let you know, because I've seen it before, and I will let you know if I'm seeing it. All right. Well, Tesla last week followed the market around, especially toward the end of the week. Looks to me like Tesla is going to follow the market around again this morning. I'll give you, of course, all that, the detail, just in a few minutes at the end. We might start to see some folks, though, gambling on the results of Thursday. This would be a normal kind of run up to a major meeting. I would consider this to be a major meeting with regard to Elon's package, his compensation package, as well as with regard to the move to Texas. We've been following this and we've been talking about it, and most of the folks that are carefully watching what's going on with regard to this feel as if the compensation package is going to pass handily. Recognize that does not absolutely guarantee that the compensation package will be allowed by the Delaware Chancellery, but that will play out later. What everybody will be interested in this week is what do the stockholders say? Do they vote that in? Also, the move to Texas, which Tesla Boomer Mama says she thinks the move to Texas vote is more important even than the Elon Musk package. But even that has a bunch of confusion going on. As I mentioned in a video I did, I think that was on Friday morning, with regard to a new lawsuit that's been filed that claims that you need a 2/3 vote to make that happen. So anyway, lots of crazy things going on, but you might see some gambling on Tesla stock going into Thursday. I would guess that people will be gambling based on that expectation of a positive vote. And so the stock could move up a little bit before Thursday, and then might or might not move up some more if the vote is positive. Almost everybody agrees that it is likely the stock will tank on Thursday or Friday if both of those votes are negative, or even if just the compensation package goes negative. All right. So what the big story is right now is that the 2024 story for Tesla is not going to get better. The 2024 numbers, the 2024 profit picture, the 2024 sales picture there's nothing to indicate right now that we're going to be seeing improvements in terms of the unit sales expectations for Tesla. And but the long-term prospects for Tesla just get better and better and better. So if you're in short-term, not investment advice, if you're in for the short term, if you're trying to ride Tesla up over the next month or even the next quarter, that may not be a great business proposition. if you're looking for what's going to happen in 2025 and 2026, that is probably, in my opinion, the best investment you can possibly make in the market right now. There's just nothing else that has the potential to run up like Tesla does. Again, not investment advice. But to firm both of those stories up, let's talk first about what's happening with regard to AI and how that impacts Tesla. So we've got AJ saying this morning, I'm sorry, let me start the other way first. Let's talk about 2024 first. This is from AJ this morning. By the way, he goes by ALOJOH. That's his handle on X. Tesla sold in Europe April and May 2024 a combined 33.9 thousand vehicles. That's the top 22 markets in Europe. In the same 22 countries during the last 2 months of Q1 2024, they sold 45,000 vehicles. And for the first quarter of and then 84.6 in the first quarter of this year. This implies that Tesla sold 39.3 thousand vehicles in the final month of Q1 2024. At present, it appears likely that Q2 2024 Europe sales will be approximately 15% below Q1 2024 sales. Basically, I'm sorry, Q2. Did I say Q1? I am so sorry. How did I misread that? Q2 sales will be approximately 15% lower than Q1 sales in Europe. So this is not the trend you want to see. However, the good news is, according to others like Tesla, only Europe is really down right now. That China and the US numbers are good, excellent, even starting to look excellent. But the European numbers are the drag right now. So why? Well, the biggest reason probably would be that Europeans right now have taken off a lot of their incentives, and a lot of the effort, a lot of what was happening last year and even the first quarter was incentive driven. So this is at least one of the explanations. Now, I think, and you heard me say and talk about this yesterday, that Juniper would be something, the Model Y refresh in Juniper would be something that would really help right now. But Elon made it clear last night, again, not going to happen. He says that the reason is that Model Y is being continuously upgraded. He said, I should note that Tesla continuously improves his car. So even that a car that is 6 months newer will be a little better than it was 6 months ago. He's meaning not just the over-the-air updates, but in fact, they continuously make improvements in the cars, daily, sometimes weekly, they're making improvements in the cars. Well, that's fine, Elon, but what we need is a trim change would be great. All those new cool stuff that you did for Model 3. I'm sorry, I'm just disagreeing with you on this one. Okay. But the future of the world and the future of Tesla is all about AI. And this from the Kobayashi letter as an indication, AI is changing the investor landscape. A record 41%, 41% of S&P 500 companies, meaning, 200 out of the 500 companies mentioned AI during their Q1 earnings calls. In other words, the index mentioned 205 companies from the index mentioned AI during this earnings season. That is up from 180 in Q4 of last year and 155 in Q3 of 2023. I'm sorry. Let me read that exactly. What's wrong with my reading this morning? Up from 180 in Q4 and 155 in Q3. Yeah, that's exactly what I said. All right. So in just 2 years, the number of corporations mentioning AI in their earnings call has jumped by 150, or almost doubling. Well, not almost. So going from 100 and okay, that's a separate thing. As AI hype has grown, the S&P 500 has hit 26 all-time high in 2024. Why? Because of the top few stocks on the S&P 500. Apple, for instance, is under pressure today. Today, right now, they're under pressure. In 2.5 hours, their worldwide developers conference will start, and the Wall Street Journal says this. At its Worldwide Developers Conference, which begins at what did I just say? Will run throughout the week. The company is expected to announce a raft of new AI features. These include message writing assistance, photo editing, and text summarization, as well as a boost in capabilities for voice assistant Siri. That should be the first thing. Siri getting better would be the most important. Apple's also expected to strike one or more partnerships for more advanced AI capabilities, such as with OpenAI's ChatGPT, according to people familiar with the matter. They're going to have to move better than just that, okay? One of the things that people are talking about is having an AI, a full-on AI capability on your phone without having to go to the internet. That would be huge, and maybe that'll be announced. We'll see what happens. All right, and this from Tesla Economics, saying Optimus will be able to pick up your kids from school and you'll be able to ask your Tesla to go pick up the groceries, according to Elon's Diablo stream last night. He was doing a Diablo, he was playing Diablo while talking to folks last night on a stream that he did through Starlink. If Tesla solves just one of these two things alone, that will make Tesla the largest company in the world. Well, I don't necessarily agree with the conclusion, but I do agree that Tesla's Optimus robot will be able to do those things. That particular note on X went on to say, of course, there's no. There's no, this is me, this is Randy saying, this is clear. There is no company on earth better positioned to take advantage of the AI profits that are coming soon. Tesla has a major lead in actual use cases through robotics, both the car and the two-legged version. And this is also embodiment. It's not just use cases, it's embodiment. Every pundit I've read, I can't think of a single one that I've read on the subject of AI that doesn't believe that the big profits and the big revenues are going to come out of both use cases, apps, and things of that nature, and embodiment, and particular embodiment. And Tesla has a lead clearly in both of those cases. What do you think? Let me know in the comments below. By the way, this is Randy Kirk. I've already talked to Brian White a couple of times this morning. Brian will be on shortly, so you want to make sure that you hit the notify so that you can hear Brian, because that's always a lot of fun. And he says he's got a couple of good subjects to talk about. And so we'll see what happens with that. In order to hit notify, though, you do need to subscribe. So please hit subscribe, and then could use some more folks joining up on the Patreon. That would be a big, big help. All right. For those of you who are longtime listeners to this channel, you know I have a very strong background in real estate. I've never sold real estate. I've sold houses and bought houses, but I mean, I've never been in the real estate game myself, but I have had numerous very high profile, top 1% real estate clients, top real estate sellers, top real estate mortgage lenders, top people in other aspects of the real estate business. And as a result of that 15 years of helping people to become more successful in their real estate careers, and I mean significantly more successful in their real estate careers, I have ended up writing 2 books, ghostwriting 2 books, one on how to buy a home, one on how to sell a home. So I've really, really, really had to become quite expert in this area. Here's what I believe after watching this really carefully all my entire adult life, but really, especially in these last 16 years, I think we're nearing the top, okay? I didn't say that a year ago. I didn't even say that 3 or 4 months ago. But now I'm beginning to think, you see, in the supply-demand curve, you've got the supply issue, which has been the issue for 15 years now. We've had historic lows in inventory availability before the pandemic. For 5 years before the pandemic, every year when I be talking to about with my clients, there's just not enough homes. There's nothing to buy. And this was a continuous problem. Then when the pandemic hit, it got worse, not better. So that after the pandemic, when we got into the whole supply-demand issues with regard to everything, you had historic lows that were at something like 50% of the levels before the pandemic, which were already historic lows. That situation has not improved except in the last month or two. And as I've explained a couple of times, that's because of another boom bust situation. Over the winter, which is normally slow in the housing market, people were out buying houses like crazy, both new and resales. And as a result, you've pushed the market forward. And so now there's a bit more inventory than usual on the market. Prices are drifting a little bit lower. That is not what I'm talking about. What I'm talking about is I think we're going to see continued price pressures upward because there's so little inventory. But what you're not going to see is you're still not going to see you're not going to see folks like me, folks like you. This market, the people that I'm talking to right now are mostly 55 to 75 years old. In this environment, you probably own a house. You might own more than one. Nobody in that market is selling their current home. They might be buying another home, but they're not selling their current home because they either own it outright or they've got a 2% or 3% loan on it. So this is not making a new property available. But what is going to happen is we're bumping up against the limits of affordability for those people who would like to buy a home. And so that is you have supply, you have demand, but the demand is partially due to whether people can actually even afford it. And so I think we're going to bump up against that. And what we're going to see is we're going to see a beginning of a softening in pricing, not a dramatic drop, just a softening in the price. Now, if things fall apart, okay, which I talked about last night also, or a couple of times over the weekend, talking about the fact that, there's a good chance we could start to see some recessionary activity in the third and fourth quarter. If things start to taper off in terms of the overall economy, then what we could see is eventually the Fed cuts. So if interest rates come down, then that, of course, would buoy, because it makes the house more affordable, that would buoy real estate up back again. But I don't see it increasing above these levels much. Maybe another couple of percent, another 3%, sure. If inflation continues, we can see another we can see the housing continue to be equal to inflation in terms of the upward trend. But you're not going to see any more 5 or 6% bumps, and you're probably going to see some 1 or 2 or 3 or 4% downward bumps. All right, so that's just me. You heard it here first. Okay. Not investment advice, by the way. Well, I don't have a real estate license either, so I can't give you advice on real estate. All right. So let's take a look at what in the world is happening with the markets right now. They are continuing to do what I said at the beginning. The Dow is now down, though. The NASDAQ is down. The S&P is down. Tesla is down. But it's about what's been happening all morning. So far this morning, it's really a sideways market. So what do we got? The Dow is down 24, NASDAQ down 20, S&P down 6, Tesla down 1. You've got the Magnificent Seven mixed. You've got Apple down. People worried, will they, come in and have something of interest? But it's only down $1. Okay, $1.37. You've got mixed. You got Nvidia down a tad. Everything in this Meta up $2. It's all just a couple of bucks, $1 here, $1 there, and it's just a sideways market this morning. Amazon is looking like this right now. Don't know why that might be this morning. Okay, then you've got the Cathie Woods are mostly down 4 cents, 9 cents. So again, sideways market. Let's go ahead and look at the percentages, because some of you like me to do that. Down 0.07 on the Dow, down 0.09 on the NASDAQ, down 0.10 on S&P. Look at that. All kind of the same this morning. Tesla down 0.68. Let's go ahead and check out what's happening with the bonds. Last time I checked, what do you call it? Yields were going up, and they continue to do so. So the bond market is telling us that they are expecting the CPI and PPI to be either flat or up. Okay, flat or, in other words, no benefit, no new likelihood, no change in what the Fed is going to do. So the CPI, the PPI are going to be flat, possibly even up a little bit. The Fed, no change in their hawkishness or bearishness. They will be like flat. They're not going to raise, but they're not going to lower either. That's what the bond market is telling us this morning. Up 3.1 basis points to 4.459. You've got the 2-year up only 0.2, 0.2 of a basis point at 4.872. So that continues to be over, right around 41, 42 basis points difference between that and the 10-year. And then you've got the 2-month also up basically unchanged, but up 0.2 basis point at 5.387. So that has slid now to under 100 basis points. So that is collapsing a little bit, but the 2-year is not the inversion is not collapsing on the 2-year. All right, let's go take a look at oil. We have got the oil business right now is up another 73. So after completely flopping last week, because there was this idea that maybe OPEC was going to allow some of their countries to increase production next year, I mean, or later this year or next year, but that they were not going to, that the overall OPEC numbers would be unchanged through the end of 2025. And so the market dropped a lot. The market is now telling us, no, we think that the OPEC is not going to, that overall supply is still going to be an issue, at least to some extent. So we're right in this kind of middle market. 76 would be exactly pinpoint in the middle of where oil has been trading on the Texas Intermediate. Brent is now over $80 again. Natural gas, however, continues to go crazy, up another 4.59% at over $3 at this point. So you can't make this up. Gold is down 4 at 23.20, kind of at the lower end of the range it's been in recently. Silver up another 0.37 this morning at 29.53. Copper up also 0.58% at 4.51, well under the $5 range where it was just a few weeks ago. And you got the dollar. The Europeans this weekend decided that they are going to move to the right politically. A bunch of people, the French have called a snap election. The Belgians have the premier has stepped down. A bunch of stuff happening right now, showing a rightward tilt happening in Europe. Probably some frustration with the governance currently in Europe. And so the result is the euro is down, so the dollar is up. And then you've got the Bitcoin is down 154 this morning, sitting under 70,000 again at 69,592. And there you go. So let's just jump back real quick and look at where the stocks are, or where Tesla is. We're not going to go through the whole thing again, but Tesla's down $1.29. Again, kind of just going like this, going flat right there along. Okay, what should you go back and look at from yesterday? Last night's video, of course, chock full. Yes, if you didn't watch last night's video, the one that we call Monday Morning, go back and check that one out. I will put the card right here. That was chock full of information, chock full of content. If you care about where the economy is headed, you care about what's going to happen this week, yeah, that's what you want to go back and check out. And then, as mentioned, later on this morning, Brian will be joining me, so check that out. It's been great, as always, having this conversation with you.